Hi, everybody. Welcome to your webinar today on how to maximize the latest tax credit, the Employee Retention Tax Credit. And today I am joined by Sean. Hi, Sean. How are you?
Good morning. Hello.
Hey. So I'm just going to go over just a couple of quick little housekeeping items while everybody's getting in and joining the room. So just sit back, get comfortable, grab your water, grab your coffee. Sean's got a lot of great information for all of you. We are going to do a live Q&A at the end. So the chat box over there on the right, if you have any questions at all for Sean, just pop them in there. Hi, Fred. How are you? So you can just pop your questions in there and then I will ask them for you on the end, everybody. So if we haven't met before, my name is Marie Baldwin and I am the training specialist here at Jackrabbit. And I am now going to turn everything over to our good friend, Sean. Go ahead, Sean.
All right. Good morning, everyone. Thanks for joining. I very excited to be back and do some webinars now that tax season is finally over. For those of you that I don't know, my name is Sean Deaver. I am a full-time CPA. So the last few months has been knee-deep in taking care of that. And today we are going to talk about some new credits. Well, they're actually not new, but there's been quite a bit of changes. I'll share just kind of a quick personal story. You might be able to see behind me, there's the picture on my wall of an airplane. And during the pandemic, one of the things I did was I went out and got my piloting license. And I talked to a lot of friends of mine who say, you know, boy, that's so complicated, flying airplanes, all the things you got to do and all that. And I said, listen, if you can survive all of the tax and pandemic credits that went around in 2020 and 2021, you could fly a 747 sleeping. So this has been a complicated year. And, you know, candidly, I have been on the forefront of all of these things, literally studying almost every day, every weekend. So a lot of these things are really complicated. I'm going to try to break them down the best I can. And hopefully, you know, you guys will stay engaged and learn something from this. And I'm going to tell you how we can help you at the very end. And please keep it interactive. And, you know, any questions you have, start posting them in there or write them down and we'll get to those at the end. So Maria, I think I'm going to share my screen now. If you'll just confirm for me that you can see presentation mode. Hopefully presentation
there it
mode.
is.
All right, perfect. Okay. And then you'll make me disappear, I hope. And I will get a going. Okay, so we're going to talk about the employee retention tax credits, some things you must know. And again, please write down some notes there. If you have any questions, you know, we'll get to those certainly. All right, so my next slide here. My name is Sean Deaver. I'm a CPA. My firm specializes in tax work for the same industries that service Jackrabbit. So child-based athletics, sport, education institutions, so gymnastics, dance, swimming, musical, theater, that type of thing. We service over 1,000 clients throughout the United States. If you need a new CPA, please let us know. But a lot of the things that we do on our side here, our firm, is we're always looking for loopholes and tax strategies and opportunities for clients that fit into these type of businesses. So what my presentation here today will be very relevant for those in those industries. So I try to break it down again to give my examples and so on to meet the needs of our clients. And then next, also, along with being a CPA, I own and head up Express Payroll. We are a payroll service specifically, again, for this. It says gymnastics there because I did this presentation to a group of gymnastics schools. But gymnastics, dance, swim, music, theater, we've built a platform that also integrates with Jackrabbit and their time clock system. So if you're interested in learning more, I'll have some information at the end. For those that are clients, thanks for joining, and hopefully you'll get some good information out of this. So the employee retention tax credit, I call this the silent benefit, and here's why. This credit actually started last year at the same time that PPP started. The problem was that when you turned on your news or you opened up the internet, everyone in the world was talking about the Paycheck Protection Program, the PPP, myself included. I think I did over 100 videos and or webinars last year, and most of them surrounded the PPP. And the ERTC, which I'll refer to it as that, but it is called the Employee Retention Tax Credit, ERTC for short, actually started at the same time, but it took a very, very back seat to the PPP. And at the time it was originally released, there was some specifics to the program. So now it's actually been updated, and I'll talk about that when I talk about the 2021 extension. I'm also going to talk about ERTC and PPP, some professional help and some ideas there. And lastly, I'm going to just have a little blurb on workers' compensation to maybe benefit some of you. All right. So let's talk about the Employee Retention Tax Credit, ERTC, in review. So what I mean by that is I'm referring to the 2020 credit. As I mentioned, it took the back seat to the PPP, but just so you know, it's a fully refundable payroll tax credit for eligible employees to receive a payroll credit for retaining their employees. So essentially, if you were able to keep any of your employees during the pandemic period of March through the end of the year, you were eligible for this ERTC credit. At the time, and this again goes back to 2020, and please pay attention, even though it's in the past, it's still relevant today. All employers, regardless of size, were eligible for this credit. To obtain the credit, however, you must, if you had received a PPP loan last year, which I'll refer to as PPP 1.0, it must have been repaid by May of 2020. You to be eligible, you should have either been fully or partially suspended your business due to COVID-19. So I think probably everyone on the phone was eligible for this because we all were impacted one way or another by COVID-19. And also to receive the 2020 credit, you had to show that your business receipts, your gross proceeds, your income, your tuition declined by 50% or more compared to the same quarter in 2019. So what do I mean by that? Most of us were impacted in the second quarter of 2020. So if your second quarter gross receipts, the money that you brought in April, May, and June, that's the second quarter, was 50% or more, 50% or less than what you had received in the second quarter of 2019, then you were eligible for this credit. Now, there's a lot of things that you need to pay attention to specifically, and many times I've been taking on some new clients and they didn't realize how things were being booked on their accounting records. For example, if you had received any type of governmental assistance or any type of PPP loans, well, those should not have been included in your gross proceeds. In addition, if you received money from clients, a lot of us, myself included, went out to clients and said, listen, if you keep your money on account and don't take it back, I will give you a credit in the future. Well, that also should have been accounted for differently and very strategically to help you show that you had this 50% reduction. Many times I find accountants and bookkeepers are not as familiar with the businesses that we're all in, and from time to time, the way they record things is inaccurate. At the end of the day, this doesn't necessarily impact how much tax you pay or how much profits you make, but it certainly could impact the timing. So it's important to make sure that you're looking at your books and that these are constructed in the proper way. Additionally, originally, the CARES Act stated that the ERTC you were not eligible for it if you had taken a PPP loan. Well, in January, as you know, everything in the world changed. So in January of 2021, they went back and changed that ruling with their extension. And they said, actually, even if you got PPP 1.0, we're still going to allow you to get we're still going to allow you to get the ERTC, even if you got PPP. But there's some clarifications and some details, and I'll go through those on a later slide. But even if you got PPP, don't think for any moment that you're disqualified. You can still obtain and get both credits. So with the ERTC, it's important to understand a little bit about the details and what qualifies. So this is a tax credit associated with your wages. So the wages that you pay to an employee, you are going to get a portion of those wages back. Okay. And it's important to understand what wages are. That includes anything that you pay them subject to FICA. So, normal paycheck, their salaries, their hourly pay, any commissions or tips that they may receive, if they traveled to meets or did private lessons, all of that, what we call compensation, is eligible. Also,
Sean,
yes,
just back to that previous slide. Did you mean May 2021?
I did not.
Okay. Because
Otherwise,
there's
yes.
a lot of chat going on
Got
asking,
it.
what did you mean by May 2020? Did you
May
mean
20.
2021?
Thank you. May 2020 is May 2020. Okay. Thank you for that question. And then in addition to wages, there is also certain healthcare expenses that would be eligible. Okay. Now, what wages do not qualify? And this is very important. Very important. I want to make sure that when I say things like very important, that you stop twiddling and you stop surfing the internet and you really, really, really pay attention, because here's where I'm seeing a lot of mistakes and where a lot of people are going to get into big trouble. What wages do not qualify? Compensation paid in cash. We all know that. If it's not going through a payroll journal or a payroll record, it's not going to be on a W-2 or in a direct deposit. It's not eligible if you're paying someone under the table. If you're doing that, you should stop doing that anyways. Next, more importantly, wages paid to a relative or a dependent of an employer is also not eligible for the credit. And lastly, and I would say most importantly, if you own more than 50% of the company, your wages are also not eligible for the ERTC. And here's where I'm finding a lot of problems. A lot of people have been relying on their CPAs to do these calculations for them. Or there are some, what I'm going to refer to as fly-by-night type individuals who have quickly set up ERTC helping centers and are doing things, and they're not reading the rules correctly. And unfortunately, if you have a payroll tax filing that's incorrect and you get these credits and anyone audits you in the future, the person who pays the damages is the person who received the benefit. So that would be us, the owners on the phone here, not the person who prepared the document. So if you have someone who is not specialized in these types of credits, who doesn't understand your business structure, who perhaps the CPA was just trying to be very helpful, I would highly caution you to ensure that they fully are up to speed with these rules. By the way, these rules did change from time to time, unfortunately, but they have now settled. So the rules have been out. The rules have been out for several months, and the IRS is focusing on these. Okay. So if you, again, to reiterate, if you own the business, if you're in excess of 50%, so if you're a 51-49% owner, the 51% owner cannot include his or her own wages. If they're the 49% owner, you can. And I did see a question pop through there. If you're 50-50, well, it has to be over 50. So if you're 50-50, you're actually eligible. Now, with that being said, even though you're eligible, there are times we wouldn't include those in a filing, and I can talk about those specifics a little later. And then again, any kids, spouses, anyone that's a dependent of yours cannot be included on here regardless of your ownership. Okay, next.
To that PPP one again.
Yeah.
So I'll just read it for you. Drew just asked, please clarify the question about the previous slide. No one was able to pay their PPP back in May 2020, and no one was already out of the covered period in May 2020. Most companies don't have to pay the PPP because it's forgiven. So the wording of that line on the slide isn't clear. Would appreciate clarification.
Sure. The wording is as clear as I can be. The loan for 1.0 needed to be repaid if it is a loan. If you have a forgivable situation, then it is not relevant. So if you have filed and it is forgiven, then you don't have to worry. But it is specifically dated as May 18, 2020. It doesn't put you out of the category of getting one, But before you apply for the ERTC, you have to have this taken care of. But if you have if your loan has been fully forgiven, moot point, this again has to be a loan that needs to be repaid. Has to be done by May 18th of 2020. Okay.
Okay.
All right. Next. Continuing on my review here. Eligible employers can claim
we've got
credit for 2020 as follows. Here's some details and some numbers, and I do have some slides later that that kind of go through some differences. So don't get too caught up on this, but I'll show a highlight later on the the difference between the plans. So 50% of qualified wages paid up to $10,000 per employee is eligible for the 2020 credit. The maximum credit you can earn is $5,000 per employee for the year. So let me say that you kind of, again, for the 2020 program, if you qualify, you're eligible to receive 50% of wages paid up to $5,000 per person. So down here I have an example. If between the period March 13th and December 31, employee 1 earns $4,000, you are eligible for an ERTC maximum credit of $2,000. If employee 2 earns $16,000 between the period of March 13th and December 31st, you hit the cap. So the maximum credit you can receive is $5,000. So again, it's during the period of March 13th through December 31st. How much money did they earn in total by person? Again, not including owners over 50%, not including their dependents or their kids or spouses. And then you can get 50%. And again, so if employee 1 earned $4,000 during that period, you get $2,000, and employee 2 earned $16,000, he or she would be capped at a $5,000 credit. What does that mean exactly? A credit? That means you will actually receive in the form of a check from the Internal Revenue Service, a $2,000 check and a $5,000 check for these 2 employees. As you can imagine, if you have 10 employees, 20 employees, 30 employees, that could add up to a lot of money. And it is adding up to a lot of money. Now, that's the 2020 credit. And that, again, the employee retention tax credit, those were the rules for 2020. And I do have a summary slide in a few slides here, because now I'm going to move on to the 2021 credit. Okay. And it basically works very similar, but the dollars and the percentages have changed. And again, I want to point out that in a slide or two, I'll have a summary if interested. Okay. So the 2021, now what they did was effective January 1st, they extended this particular credit. It was supposed to expire at the end of the year. They extended it to go through June 30 as part of the Consolidated Appropriations Act. At the same time they did this extension, they added a sentence that said the ERTC can be used with PPP. So as I mentioned a minute ago, or a few minutes ago, originally you could not get PPP and ERTC at the same time. Now you can. And you can get them both. Now you can't use it for the same purposes. So let me give you a quick example there. If you got a PPP and you got it on, let's say, we're going to talk about the 2021. Let's say you got magically, you got the second round of PPP and you got it on January 1st. And you used that PPP for January and February, and then it ran out. Well, you can't also get a tax credit on that money because that money wasn't yours. It came from the government. But starting March 1st through the end of June, you can get ERTC. So both the programs work in harmony. You can use them both. You just can't use them for the same payroll being paid to the same person. Okay, so this again was the extension. It enabled you to continue with this credit, and they made the rules even easier. So let me talk about those. So first of all employers, regardless of size, are eligible for this credit. The credit runs from January 1st through June 30th of 2021. So for the first half of the year. Now there was an extension on this, but I'm not going to discuss it at this point. Just understand that there is an extension. They're talking about extending it even further. You must have been fully or partially suspended of the government order limiting business due to COVID. So same thing. We all were shut down. We're all kid-based schools or enterprises. And at one point in time, they shut down the schools. They shut down us. Some of us were able to operate at a very, very, very limited level, but all of us were impacted. So I shouldn't even have put this here because eligibility-wise, we're all eligible. Now, big one here. I mentioned in the 2020 program that you had to show a decline in gross receipts compared to the same year or the prior year of 50%. And that's true for the 2020 credit. But for the 2021 credit, you only need to show a decline of 20%. So let me give you an example. If in the second quarter of 2020, you had $80,000 in receipts, and in the second quarter of 2019, you had $100,000 in receipts, that's a 20% decline. So you can qualify. Now, I will tell you this. I have over 1,000 clients in the gymnastics, dance, and swim industry. Thus far, just due to time constraints, I have applied and received roughly, call it 400 ERTC submissions. And every one of them has either gotten the 2021 tax credit or the 2020 tax credit. Some got both because they had a 50% or more decline, but every one of them thus far has received at least a 20% decline. And if you think you don't be foolish. Still reach out because, again, as I mentioned on an earlier slide, there may be things that are accounted for incorrectly or that could be accounted for differently to ensure that you got this reduction. Now, if you were the one facility in the world, in the United States, that during COVID, you continue to run full business, full operations, full clients, and by the way, I do have some people, like, for example, in the dance industry that were able to pivot very quickly and immediately go to Zoom and retain a large percentage of their clientele. So there very well may be a handful of people out there, but even those people, there's a nuance in the ERTC credit that says even if you were able to maintain your revenue, if you were able to prove that the government shut you down for a certain period of time, you're still eligible. So again, I have to emphasize here that everyone listening is likely eligible. And if you're not, you're the one. Let's put it that way. Okay. So again, if you can show a 20% reduction, you're eligible for 2021 credits. And as I mentioned down at the bottom here, my bottom bullet point, ERTC can now be used with PPP loans, but you can't claim a credit on the same dollars used. And you can go backwards into we are going backwards into 2020 to help people get those credits. Again, they do have to show the 50% reduction, but if we can get there, we're going backwards. Okay. Next, what wages qualify for the ERTC? No changes from the 2020 versus the 2021. Employee wages, salaries, commissions, tips, meet fees, private lessons, what birthday party fees, whatever it is that you pay people are eligible. Same thing as certain healthcare costs. And as I mentioned earlier, my very, very, very important 3 bullets at the bottom here: compensation paid in cash, relatives or dependents of owners, and wages paid to owners in excess of 50% are not eligible. Okay. And that is just a risk you do not want to take. If you've got someone who's helped you fill this out and they're claiming those, I would immediately contact those people and have your work revised. I did see a question here come through, the 20% decline. Remember, this is 2020 versus 2019. Okay. Please read this bullet point right here. Bullet 3 under eligibility. The decline in gross receipts as compared to the same quarter in 2019. Do not, under any circumstance, if you have the numbers 2021 in your mind, cross them off. It is a 2021 credit, but it is based on the prior years. It is nothing to do with 2021 in terms of eligibility. All right. Now, employee retention tax credit in summary. What's the difference? As I mentioned earlier, it was a maximum of $5,000 credit based on their payroll paid between March and December. This is a little different. And again, I have a slide that compares the two, but just so you have a quick view here, in 2021, the credit is limited to $10,000 per quarter. The 2020 program is $10,000 for the year, and the year being defined March 13th through the end of the year. So this is 10 grand per quarter, and the credit amount on wages is 70% as opposed to 50 per quarter. And the maximum credit amount per employee is $7,000 per quarter, maxed out at 14 per employee. So if you remember in my prior example, employee one had earned $4,000 during the year and got a $2,000 credit. In this on the 2021 program, if an employee earns $10,000 during the quarter, they're going to get, the employer is going to get a $7,000 credit. And if you remember in my prior slide on the 2020 program, I had said employee two had earned $16,000 and only got a $5,000 maximum. Well, here, if the employee earned $16,000 during the quarter, they would get a $7,000 maximum. And this is, by the way, just for the first quarter. In the second quarter, if employee one earns another $10,000, the employer is going to get another check for $7 grand. And if the employee two earns another $16,000 during the quarter, the employer is going to get another $7 grand. So folks, as you can see, if you've got 10, 15, 20 employees, now most of us aren't paying our people $10,000 per quarter or $16,000 per quarter. I get that, but you're going to get 70% of everything you paid out returned to you if you qualify. All right, here's my comparison slide. So in the middle columns here, I've got the 2020 program, and in the right column, I have the 2021 program. So the first one to remember here with the 2020 program is a 50% credit maxed out at $5,000 of qualifying wages. And the right-hand side, the 2021 credit is 70% maxed out at $14,000 in qualifying wages. The first program, the 2020 program, remember, is an annual number. And the second, the 2021 program is, remember, it is per quarter. So that's why it's 14,000. Okay. So hopefully that makes sense. Again, even if you got PPP 1.0 and PPP 2.0, then you're eligible. And here's a little nuance. Here's a little trick for those of you that aren't aware. For those of you who got PPP 2.0, in other words, the 2021 program, the only way you were to get that, the eligibility requirement, was that you had a 25% reduction in proceeds. So if you had a 25% reduction in proceeds, guess what? You had to have had a 20% reduction in proceeds. So therefore, that automatically, if you've got PPP 2.0, you're automatically eligible for the 2021 program. You may not be automatically eligible for 2020, but you're automatically eligible for 2021. And I can't tell, if I had a nickel for every CPA that called me and told me I was told their client that was wrong, I would have at least a few dollars in my hand. Okay, so please, if you're working with someone who's not up to speed on these, that's fine. This is over and above what a typical CPA does do and should do. If they're not heavily involved in payroll, many CPAs are not getting involved, and I do not blame them. The professional liability insurance that they have to take on to do these credits way outweighs what they normally have. And so therefore, I have some resources for you at the end, but I just want to make sure you understand that if you're not hearing this from your CPA or something, then it doesn't surprise me, and it's certainly not their fault. To stay on top of these things is more complicated than flying a 747. All right. So those of you got PPP 2.0, I'm just going to spend a few minutes on this here. You had to apply for the second loan. Hopefully all of you got it. You must have received and used the first draw loan. Now, here's a little nuance. You had to have had it spent, but not forgiven. Okay, so, but again, if you've already gotten it, this is kind of a moot point. They were a little stricter, but as I point out here, you did need to show a 25% revenue decline The maximum loan was $2 million. And generally, the terms were the same as the first. Here's a quick slide. For those of that want the slides, we're going to send these out anyways. So, but that's why I kind of put this in here. But here were the terms. They were very similar, fully forgivable based on payroll costs. Interest rates were the same, no personal guarantees. The maximum loan benefit was a bit reduced, but I don't think anybody was that I know qualified for anywhere near $2 million. So very similar, terms and conditions. Now, the one thing that did change with the 2.0 program was that they extended the use of non-payroll costs. Okay, so business mortgage interest was the same. Okay, if you own the real estate, by the way, you are not allowed, and you own the business, you are not allowed to include rent in either 1.0 or 2.0 as a deduction. You were allowed to put interest payments made to banks, but not if you paid rent to yourself. You weren't allowed to claim that as a deduction. And that's some mistakes that people made. So make sure you're aware of that. If you don't own your own building and you pay rent to someone, that was certainly a non-payroll cost. Utility payments were included. They also allowed certain operational expenditures as well as property damage costs. If you put in, clear plastic signs or video cameras for having people view in the parking lot, or you put in, hand dispensers of, Purell hand cream or whatever, that stuff's all included as a non-payroll cost that's refundable for your PPP loan. Supplier costs, IT costs. So many of you had to get Zoom accounts, and you had to, put in certain things like touchless payment processing, and all of those types of things to help you operate became deductible. You can't throw like your normal internet charge on there. That's just a normal, well, actually you could, because that's a utility payment. But certain things to help you do business better, more efficiently, or required, then all of those types of deductions would be deductible as non-payroll costs. Now, one thing I want to make sure I comment on is why do I even bring up PPP? Who cares? Why is this important? Well, when we originally did the PPP program and these two credits were not able to be utilized together, it was very easy for us to get forgiven by, I'm going to use the term, throwing as much payroll against the forgiveness application as possible. What do I mean by that? Well, you see, let's say I got a $100,000 PPP loan back in 1.0, and it was for the 8-week period. And during the 8 weeks, I didn't spend the 100, so I wound up opting for the 24-week program. Most of you are aware it was an 8 or 24-week program. So during the 24 weeks, I spent way more than $100,000. I probably spent $200,000 in payroll. So I went to the bank, I went for forgiveness, and they said, okay, Sean, you can submit rent payments and copies of leases and utility bills and canceled checks. And I was like, you know what? That's way too much work for me. I'm not interested. I'm just going to use my 24-week payroll, which was $200,000 in my example. And I'm just going to use that. And obviously, if I spent $200,000 on payroll, they're easily going to forgive $100,000. And that was a very smart thing to do. Unfortunately, what did I do by throwing all of that payroll? Is now, since that $200,000 resides on my PPP application for forgiveness, I can't get ERTC credits on that same $100,000. So I've disqualified myself from getting credits on that extra $100,000. So we didn't know any better back in 2020. There was no such thing as using both programs together. But in January, when they changed the rules, they changed the way we look at PPP now. So what I'm doing with all of my clients is strategizing on these two programs together. If you remember, I said earlier, owners and owners' kids cannot use ERTC for themselves. Okay, but they can use PPP for themselves. So when I think about ERTC now and where I'm seeing a lot of people disadvantaged is people are just taking as much payroll as they need to get forgiven for PPP and leaving the residual for the ERTC credit. Real simple, folks. Anybody with a third grade mathematical arithmetic education could figure that out. But when you want these two programs to work together in unison, in harmony, to maximize the absolute most amount of money for yourself, you can't just look at it that way. We're literally going into each payroll itself and breaking apart the payroll registers to say, maybe the payroll from the month of January, I might use half of it for PPP and half of it for ERTC. I'm certainly going to strategize and put more non-payroll costs against my PPP loan so that I can get maximum benefit on the ERTC. I'm delaying using of the PPP because the ERTC is only a 6-month program. So there's a lot of strategies here. And if you're using someone to help you with this, or if you're trying to do it on your own, Godspeed, if that's the case. This is complicated. We've done hundreds of these already, and I get smarter each time we do them. We're working with a specialist firm that helps us with these as well. So again, if you're trying to do this on your own, or if you're using, I don't want to take credit away from anyone. There's a lot of smart people out there, but if they're not doing this in accordance with your PPP, then or not asking for all of that information, that should be a red flag. You could be missing out on 5, 10, 20, who knows, thousands of dollars. Okay, so keep that in mind, and I'll end of the day, just make sure you keep that in mind with who you choose to use. ERTC credit filings are complicated. You do not want to make a mistake with this filing. Here's a quote right from the IRS website. The agency has recently hired hundreds of new agents whose main purpose will be the auditing of various assistance programs that were implemented to aid families and small businesses during the pandemic. Our goal is to ensure that only people that received the aid did so ethically, honestly, and per the guidance issued. What does that mean? That means do not try to skirt the system here. Don't try to game the system. You need to do what's right. You need to do what's honest, what's ethical, and you need to make sure you get the best bang for your buck, but you need to do it in the right way. Here's an example of where I talked about earlier about owners. There was a group of people that, some people that I work with who wound up using vendors very quick early on in the program, who came out and said, we'll do this for a very small fee. We'll help you out. And those filings are incorrect. Now, I can't comment on them because they don't have my signature on them, and I'm not touching them with a 10-foot pole. But here's what I'm going to encourage you to do. Go back and look at what was filed or who you're working with to make sure that they fully understand these programs and how they're to be used. Because at the end of the day, if anything's wrong, they come back to the owner of the business. Make sure you have a professional working on your behalf who's helping you with these filings. As I mentioned, the PPP and ERTC need to be used in harmony. You can receive both the programs, but you can't share the same dollar. I kind of went through that. As I talked about, strategies have to be implemented to incorporate these two programs. Don't just use one program until it's complete, until you've run out of money, and then use the other. Thus far, the companies that I'm working with, as I mentioned, we've thus far received over $50 million in taxable credits for our clientele, ranging from $69,000 was the lowest and $279,000 was the highest. Again, people, so you understand what this means. If you get an ERTC credit of $69,000, that means someone just handed you a check for $69,000. So this is a lot of money for you to be focusing on. And if you're not aware of these programs, if you're not aware of the benefit, obviously you want to make sure you take advantage. I'm also noticing that people who are doing these on their own or using, perhaps their bookkeepers or CPAs, and again, no discredit to anybody in those, everyone is very intelligent and obviously doing their best to help as many people as they can. But if they're not really, really, really well versed in these, I'm noticing differences of, maybe even tens of thousands of dollars in worst case scenarios. So again, really make sure you've got a good professional in your corner working on these. Okay, that's kind of the end of my formal presentation. I just want to mention one last thing and a little bit of, again, some details. As I mentioned, I'm presenting this in accordance with Express Payrolls, one of the firms that I head up. We are a full service payroll provider. We specialize in the same industries as Jackrabbit. So our specialization is gymnastics, swim, dance, music, theater, daycare, and so on. We are exclusive partners with the Jackrabbit Time Clock program. We are less expensive than all major providers. We help you with compliance, HR, and so on. And for those that use self-service programs, I really want to caution people. I'll just tell you a quick story. In 2020, we picked up about 200 clients. I would say 40 of them, 45 of them were using a self-service tool. Unfortunately, of the 40, I would say 38 of them had massive compliance issues. So even though you think you might be saving a couple of dollars, you might be thinking you're okay doing this on your own. If this is something that you live in day to day, you could be causing yourself some problems down the road. In addition, many of the people we picked up were not even aware of the programs that existed. One guy from QuickBooks, one guy who was using QuickBooks, I'll just name him as an example. He didn't even know about this program, and he got $130,000 in ERTC money. So if you're not up to speed on these things, please consider using professional help, whether it's us or someone else. If you're interested in talking or getting a quote, please let me know. And lastly, one other thing I want to point out we did for our clients. So here would just be a great example of what I'm going to refer to as we consider ourselves a niche or specialist provider. One of the things that we did with PPP, and I'm blown away by this, workers' compensation. For those of you that paid PPP money out last year for workers' comp during the pandemic, for time that was really not, I'll say, worked, okay? Because at the very beginning, the deal was you're to pay payroll to people that, for doing things maybe at home, maybe their jobs changed, or maybe they weren't teaching at all. And guess what? You paid full workers' compensation rates on those. What we did with our clients is we went back for those that are under our workers' comp program. We renegotiated a new rate. You certainly don't want to pay $2.50, $3.50 per thousand on someone who is sitting at home. It's a lot different than if they're teaching a back handspring or teaching a cartwheel or teaching a pirouette. So these are types of things. Just a quick example, on average with our workers' comp change last year, we saved our clients around $500 to $550 on average. And that was not even very hard lifting for us. So again, these are things that as a specialty provider, we help out our clients with. So something to consider if you're looking or considering changing of payroll. Now, lastly, here's my contact information, my phone, as well as our website, express-payroll.com. If you need help with the employee retention tax credit, we are happy to help. We do charge, we are commission-based. So if we do all the work for you and we get no type of credits, then you don't pay us anything. If you do use our service, and by the way, you don't have to be a client. We're doing this for anyone. If you want to contact me, please do so. And, we'll do this work. And again, if we do find credits, we maximize as much as we can. And then the way we get paid is we take a commission on what we earn with some certain caps. I hope this was helpful. And I'll just put up one last slide here. This is just, again, my contact information, both on the CPA and the payroll slide. And with that, I will turn it back to see if we've got any questions that are pending.
Questions. Janet asked, can you show the slide that speaks of the forgiveness on 2.0? And then she also asked, will the credit received be counted as income for 2021?
I don't think I have a slide that talks about forgiveness. So I'm not sure. This was how you got the loan. This was the details of the loan. And this was forgiveness for non-payroll costs. So maybe this was the slide she was referring to.
Maybe that one. Yeah.
Yeah. And then, so that's the first one. And then in terms of the next part of the question there, which I think was, how will this be treated? This will be income. Honestly speaking, at this point, the way it looks like it's going to be treated specifically is it's going to be a reduction of payroll taxes. That has yet to be finalized, but let's just make sure you understand that, yes, if we get you a check for $100,000, you will have to, unfortunately, pay tax on it. But anybody else that wants some free money for doing not much, I'm sure most people are willing to pay the tax on it. But excellent question.
Okay, and Janet said it was before the second draw slide that was in a chart. That's the slide.
Oh, that's not the forget. That's that maybe is this one, the old versus the new. So this is the details of the 2020 program versus the 2021 program, highlighting the 50% versus 70% credit, 5,000 maximum versus 14,000 maximum. Maybe that's the slide she was referring to. Oh, Janet. Okay, Janet, this slide is really irrelevant because if you didn't get the PPP,
Okay, let me.
that ship has sailed. So this was to receive the loan. This is what you needed to do. All right, next question.
Just get back to all of my questions. Okay, this one says, I was a 50% owner until May 2021, and now I am 100% owner. Can I use ERTC for myself prior to May 2021?
Great question. And there are 4 things that you need to accomplish to get that taken care of to see if you're eligible. And I unfortunately only know 2 of the 4 steps. I'd have to look back to them. So what I would say with that is, doesn't really matter. I'm assuming you should be able to get credit for your other employees. Well, it still matters. You should be able to get credit for your other employees, of course. But I would seek professional help on that. And if you're not using anyone professionally, you'd like to reach out to us. I'd be happy to do the research for you if you're one of our clients.
Next one. Eileen asked, so the 20% decline is for 2020 and 2021 now? Question mark.
Nope. You have to have a 2020, the 20% decline is for to be eligible for the 2021 program. To be eligible for the 2020 program, you need to show a 50% decline.
Okay, and then she also says, I'm not clear, you can't or can get credit for the payroll you used your PPP on.
You may not double dip. So if you used payrolls in the 2020 period for PPP and you applied for forgiveness and were granted forgiveness, you may not use those for ERTC. If you haven't filed your PPP 2.0 application, you shouldn't until you speak with someone who can help you with the ERTC to ensure that you get the best benefit for both programs. Still there?
I was on mute.
Oh, sorry.
Talking away. I live in a flight path, so there was I have a small, probably like what you're flying over my house.
That's right. A 747.
Let's see. And this is from Allie. We were told we were not eligible for the ERTC because we received VCA, VA CARES funding. But I know, in quote, the rules have changed a lot. Are we in fact eligible? We received PPP as well as some VA CARES grant funding.
Yes, you are still eligible, but you'll have a little more restriction. But yes, you are still eligible. And yes, you're still eligible. Short answer. But again, you'll be slightly more restricted than someone who only got PPP.
Okay, and Van says, but you may have paid payroll from March 13th until you received the PPP, and those are eligible?
Those would be eligible. So Diane's comment here, I'm interpreting, is that Diane from March paid payroll from March 13th until, let's say hypothetically May 1st, and at May 1st she received PPP and started utilizing it. then to answer your question, Diane, from March 13th through May 1st or April 30th, you would be eligible for ERTC. Now, of course, remember, you do need to have the 50% reduction test, but as long as you do, then you're fine.
Awesome. And that's it for the questions.
Awesome.
If anybody wants a copy of the slides, you can reply to your confirmation email and I can get them sent out for you. And that has all of Sean's contact information. So thanks everybody for participating and asking all your questions. And Sean, thank you so much. There's like so much information.
Yes, I know. Thanks. I appreciate everyone staying with us, and it was a lot to swallow. So I hope you're able to stay with us for most of it. But the underlying message there is there's still money out there for you. Please make sure you're looking into it.
Yeah. And then just one last thing I want to touch on is somebody asked, is this for U.S. employers only, which there are different loans in Canada? I know the person was from Canada that asked that. Right. So I think just reach out to a professional on this side of the border if you need to get information.
This is U.S. only, unfortunately. Yeah. Canada does have very, very different rules, and those are mostly loan programs. So I probably should have started off by saying anyone not in America should probably, drop the call. But thanks for staying anyways.
Yeah. Well, it lets people know, though, that there is like things out there and that reach out to professionals to kind of help them. Absolutely. So awesome. Okay. Bye, everybody. Thank you, Sean.
Everyone. Have a great day.
Bye.